Alright, so this is just going to be a quick stock talk, kind of for the week, just generally what I see going forward, and a little bit more, post um, Fed meeting, right? Wasn't the Fed meeting last week, if I'm not mistaken? Yeah, I think it was. A lot of earnings reports: Amazon, Apple, Meta, Microsoft, Google, um, and coming into November, kind of my watch, and what my focus is going forward, right? So. We continue to see this exhaustive top being put in, as I discussed last week, right? The multiple gaps, the small spread candles to new highs, right? And just a lack of really aggressively or clean follow through from a particular, like from the buyer's perspective, right? So when you're seeing stuff like that, and then we put in this notable kind of hanging man candle leading into the gap down off the Meta report on the 30th. Off the Fed meeting fade, right? It's really not an appealing look. However, right, we have this INWOG, and we have a lot of speculative binary events throughout that window, right? The Fed meeting, the earnings reports Thursday and Friday, or Wednesday after hours, Thursday after hours, respectively. So it's not necessarily like an opportunity I think is super, super vulnerable for a short side position on like bi-weekly options. It never really set up super, super clean. There was an opportunity on like Qs if you wanted to take it on like these fadeable gap ups, but nothing that I really sit here and I'm like super super confident in terms of taking a leverage position, right? Because you have to think about like the risk to reward and the we have a gap from Thursday, we have a gap now this week, and just the targets overall, right? I mean, you could take the short exposure on Friday or Thursday, but you have to be kind of respect the gaps that we have left below, right? And in my opinion, within this window, as I've said before, it's along on specific positions and watch this top develop. Maybe take a short stab every now and then, but it's really not anything that I'm sitting here getting super super confident in like a short sided trade. Besides, as I said, little scalps and day trades that you can take on some week out exposure options wise, right? But when I think about just how this is developing, it would be really nice, as you can see here, we have two INWOGs to fill, or we have one INWOG to fill. We have a gap from the Friday before that a couple weeks ago. And I would love, honestly, right, if for this exhaustion that we're seeing here, because you're not seeing, like I said, when you see those, exhaustive gap ups and not really, um, sorry, one second. Not really any strength from the buyers, right? I think you really want to see a retracement, and I think that's most likely going to happen to this 627 spot, right? This general range, this October 24th gap, a back test of this kind of 20-day EMA, I guess you could say, and your 9-week, and then just this previous like resistance that was faded on the footprint candle from the 10th to be retested and established with a constructive harmonic pullback, filling some of these gaps, right? That's kind of my main focus, I think, in terms of what I would look at SPY QQQ. Obviously, yeah, you can take the short off of the Friday gap or Thursday gap. Yeah, you could potentially take this little discounted lower high range that we're developing at the current moment in time um, and trade it into the INWOG. I mean, you're seeing signs of exhaustion. You don't really see a super strong intraday accumulation here on Qs. So that's kind of a vulnerability in terms of a potential short you could take here on QQQ to target 628, right? That wouldn't be a bad move at all. And it wouldn't also be a bad move to target 635 into the, INWOG as well. But it's not necessarily like a short that I'm super, super confident in terms of what I'm slamming the table, getting extensive exposure, positioning, leverage on, right? I'm more focused on a lot of the longs that I think really, really set up nicely, right? And of that, Lily was really, really nice, right? We have this big run up into 2024, right? We have the kind of exhaustive signs shown throughout this range. We have our August 5th print with the earnings report occurring during that window as well. Failed progression. And then we see our initial low put in November where we have a nice kind of initial preliminary sign, right? Kind of initial floor established at 711. that's taken out in April. We see this is kind of our climax being put in. We see a really, really nice reversal off of it, or about 40% from 33% from the lows. We see a test, an attempt at a higher low to reclaim this previous support, this previous floor, fail, and then kind of our third lower low established right within this range, and kind of like our like spring occur into a test and a reclaim of that 7-11 spot, and then the subsequent rally and failure within this gap, and then higher low found, right? So this is just overall like a really, really nice clean chart with the signs of accumulation. Look at this capitulation, this climax being put in to establish our floor. We undercut that, we attempt to reclaim it, we fail within this general range where there was a predominant seller. And then we have this historic kind of volume put in, the high since 2019, whatever the fuck was going on back there. Underneath these lows on a 14% report in August, and then reclaiming that subsequently, resulting in like a 20% rally off this candle. So this has been a really nice chart. We have a flush, not really a flush trade, but a gap up and a fill of this gap off of the earnings report. That could be pretty vulnerable if you took that on an options position. A great commons focus down here that gives you like a 25 to 30% return, targeting 900, right? That's kind of your 900 to 930 would really be your ideal target on this trade, and then you have an options exposure off of this earnings report flush on maybe some Decembers, right? So the LLY chart is phenomenal. I think UNH, if this can revert to a golden pocket lower high range, sweep this gap from the 15th of August where that Warren Buffett news was, then I think it's pretty vulnerable. Again, for a trade up to the 400s, like I said, you're seeing some kind of signs of exhaustion within a very large gap, and a lot of gaps left unfilled below. And a lot of people chasing this name after we made like a 60% return on it in just a short period of time from August to October. So then you see like a gap up off the report, some good numbers. You know, this name has kind of been beaten down financially, potentially. I don't really fucking know. As far as like the macro perspective of it, I don't really care about that. So watching this still continuously. Nike, a common trade that I really, really like going forward to target the 80 to 90 to $100 range, is now filling this June earnings gap that sparked a 15% move with a really nice influx of volume, and potentially occurring after like our test, and now getting a last point of support through a range that has really seen little to no follow through from a seller's perspective, and has predominant signs of an accumulation on an underperforming name, right? So I've talked about Nike. I really like this forward peg. However, this is kind of still a commons focus for me until we get a really clean perspective on the broader equity market. But I think this can easily push this $15 spot within the next couple of weeks after this historic volume put in on the earnings report. And a really aggressive move on a chart that has a lot of conviction and confluence behind it, right? Similar with Snap, right? I think Snap could push this 939. We have an earnings report this Thursday after hours, Wednesday after hours, right? And I think that I've discussed the conviction behind this chart on, right now it's kind of two different perspectives. A long-term investment within this window could potentially be lucrative, but my main focus here would really be like a short-term exposure, trying to target 940 to 10, and then potentially rolling after that, and then waiting for an options trade to develop after the earnings report, right? Path, a nice 3 inside weeks, potentially coming on 4. This is a really nice name, and if we can kind of reclaim that 15 spot and base this, maybe sweep some of these gaps, I think that's a really, really clean position to continue to monitor on commons. Like I've said, this is another beaten down growth name that has really shown a lot of strength lately, and the undercutting of the 2022 lows, which initially sparked a pretty aggressive rally by 170%. We see those undercut on August, fail within this 35% earnings gap, undercut these on even more volume in March and April, spark a reversal, and then that test. Very similar to that LLY chart, just on a different kind of perspective, right? Because you see we have the initial buyer, the stall, the undercutting of those lows where the change of hands and inventory collection happens, trapping those early shorts, and sparking those stop losses to be rated. We have the higher low being attempted here, and then the break of structure, and the really the volume aligns with the price action in terms of this $303 million weekly volume, right? It's very similar to LLY when you see the undercutting of these previous floor of accumulation and then the reclaim of that, right? It's kind of that Wyckoff picture perfect perspective and entry opportunity, right? Still like CRM Commons. This is a really, really clean chart in my opinion. However, it's just a speculative idea from the current moment in time, right? UPS is something that I'm watching, right? We just took out the COVID lows with a lot of, exhaustion occurring. We had the April lows being put in, the move off of the report, and then a really notable kind of lack of progression from the sellers after this range, right? Where that selling could have been absorbed, establish a nice base here, and then get a nice gap on the report, right? And so this could be, in all honesty, right, a nice little trade from 90 to 100 on UPS, right? This is something I'm going to kind of keep on the watch list. Beaten down name, right? When we think about, just took out the COVID lows. Potential reclaim of the April lows, offering an opportunity to take this to the full earnings gap that we had in July, where, we're seeing a really aggressive amount of volume put in here. And the potential for this is definitely there, right? It's definitely there for a nice little 10% move. Nothing more, nothing less, but pretty pivotal points within this chart are being reclaimed and kind of a harmonic weekly perspective going on here, right? Where we can have this low, we have the exhaustion shown here, and it's just kind of a weekly reclaim of this general $90 spot, right? Where we also had an initial low kind of put in on the report in January, right? So this could be 1, 2, 3 lower lows and then a higher low being put in. I mean, this could move to 130, but I wouldn't really be super keen on that. I haven't seen a lot to give me that conviction yet. Let's look at FedEx. No, I don't really like that. I haven't seen a lot to give me the conviction for like a 130 move, but a common trade of 10 to 20% from 90 to 100 to 110 is pretty appealing now on UPS with like runners to 130. I mean, this is a lot of climax being put in, even back here in July. This is a good looking chart, right? So I'm keeping that on the watch list. PEP looked clean. I honestly love a full gap fill from the July report. Adobe hasn't given me any good looks yet. Full fill of this gap would be pretty nice on Coke. Not much else, if I'm being completely honest. This had the in-wog last week. Didn't really get a nice spark of continuation. And it's something I would like to take out these lows and probably head to the 120 range. So, I mean, that's really pretty much it, right? We have, I don't really like any Mag 7 names, short or long, at all. Right? We have a lot of volume on this meta print. I wouldn't really touch that. NVIDIA, I think this is going to continue to still develop a range similar to last Q4s, where we can get that move in like a post-January expiration sequence. Said that before, right? We have something potentially similar developing on AMD, which has an earnings report tomorrow after hours. Palantir has an earnings report tomorrow after hours. Not a big fan of this Bitcoin range. I think this heads sub 74,000 relatively soon. I think it reminds me a lot of the 2021 to 2020, I guess just 2021 top. Personally, I think a lot of people are going to be unprepared for what is potentially an underperforming equity market in the coming future. Just in general, because of just the potential speculative bubble popping, I guess could be a good terminology to use. But most of all, just like unprecedented rate of returns from COVID lows, from 2022 lows, right? Even from here, from 2025 lows in April, right? Being at 43%, right? We're up like 30% on the year. 17% of the year. I guess we opened at like 594, right? 590. Just very extensive returns, right? That I feel like a lot of people are not going to be prepared to live without, right? You look at 2000 to 2007, right? Big time move. I mean, we're up like 200% off COVID lows, right? Big time moves in 2000 up to 2000, right? The financial, or not the financial crisis, the dot-com bubble. We had this reversal in 1998, 20%. It's very similar to this decline. We had a 21% decline from February highs to April lows. Potentially getting something very similar to that putting in here, right? And you have the top, right? You have the top put in 2000, right? We fade 48%, and then we continue higher off of that, and we fail the highs for a very minimal follow through in terms of like a new all-time high put in, which in real inflation numbers is going to be a loss of money, most likely, obviously. 1.5% new all-time high in 2,700 days, and then a subsequent decline, taking out those lows in the financial crisis. And then we rally. We have a COVID decline, about 50% lost, 40% lost, and then we continue off of that. But there was an injection of liquidity. There was, just a whole completely different scenario here. And even if you look at 1968 to 1982, back here, right, like, yeah, back here, right, like, you don't make any gains till 1982, right? We stay around this $100 range for like 15 years, 14 years. Like, I feel like people aren't prepared for a world where the equity market doesn't perform like it is, right? And I don't know what's going to happen. Nobody really does, but I mean, people are flooding into gold, which is a little questionable in terms of gold being up like 30% on the year, 50% on the year. Jesus. So I don't know. Quick little stock talk. Nothing much.